The air crackles with anticipation as Q3 2025 draws to a close. For Tesla Inc., the Austin-based electric vehicle juggernaut, this was not just another 3-month reporting period. It was a crucial litmus test. Promises made by its enigmatic CEO, Elon Musk, would either crystallize into tangible results or dissipate into another round of revised expectations. The entire industry held its breath. Legacy automakers in Detroit, legacy automakers in Germany, ambitious startups in China. Tesla's performance has long been a bellwether for the broader EV transition. The Q3 report, released today, September 19, 2025, it promised to offer the clearest picture yet of the company's trajectory in a rapidly evolving market. This quarter was particularly significant for one towering reason: the Cybertruck. Years of hype, production delays, a polarizing design that seemed to defy every convention of the pickup truck market. This was the quarter meant to demonstrate that Tesla could not only build the stainless steel behemoth, but also deliver it at a meaningful scale. The success or failure of the Cybertruck ramp-up was seen as a proxy for Tesla's ability to innovate, its ability to execute on entirely new product categories, a skill it desperately needs to maintain its growth narrative. Beyond the Cybertruck lay pressing questions about its core vehicle lineup, its standing in the hyper-competitive Chinese market, its ability to fend off a growing army of rivals. The stakes have never been higher. Searching for the narrative that would define the next chapter for Tesla and the electric revolution it continues to lead. When the official press release landed, the headline figures told a story of continued, albeit moderated, growth. For the third quarter of 2025, Tesla announced global production of 495,100 vehicles and global deliveries of 478,500 vehicles. Compare Q3 2025 production and deliveries against analyst expectations and Q3 2024 figures. These numbers represent a significant achievement. The company's massive scale, a feat unmatched by any other pure-play EV manufacturer. The production figure, just shy of the 500,000 mark for a single quarter, speaks volumes about operational maturity. Gigafactory, Texas. Gigafactory, Berlin. Gigafactory, Shanghai. Gigafactory, Fremont. The company has become a manufacturing powerhouse, capable of churning out vehicles at a pace once thought impossible. However, these impressive totals must be viewed through the lens of expectations, Wall Street, and Tesla's own history. Analyst consensus had coalesced around a delivery figure closer to 485,000, meaning Tesla's official number came in slightly below the street's forecast. While a miss of a few thousand units might seem negligible for a company of this size, it was enough to give pause to investors. The slight shortfall immediately fueled conversations about demand saturation, the impact of global economic headwinds, and the effectiveness of recent price adjustments. The Q3 numbers, therefore, paint a complex picture, one of a massive growing company now grappling with market saturation and economic gravity. All eyes were on one specific data point within the report: Cybertruck production. After a slow start following its initial launch, this was the quarter intended to showcase a steep ramp-up at Giga, Texas. The numbers revealed that Tesla produced approximately 15,000 Cybertrucks. They delivered just over 11,000 of them in the third quarter. For any other automaker launching a brand new vehicle, these figures would be considered a monumental success, especially for a product with such a complex and unconventional manufacturing process involving its stainless steel exoskeleton. The ability to produce over 10,000 units of a radically new design in a single quarter is a testament to Tesla's engineering and manufacturing prowess. However, the Cybertruck is not just any other vehicle, and Tesla is not just any other automaker.
Elon Musk had previously set aggressive targets, suggesting a production run rate of 250,000 units per year was achievable.
While the third quarter figures show a significant step up from the initial trickle of production, they still fall short of the exponential curve many investors had hoped to see. The 11,000 deliveries, while substantial, did not make the seismic impact on Tesla's overall delivery numbers that some bulls had predicted. The Cybertruck remains, for now, a relatively small contributor to the company's total volume, raising questions about how quickly it can become a true third pillar of growth alongside the Model 3 and Model Y.
The production ramp has been notoriously difficult, a fact Musk himself has admitted.
The challenges lie in handling the ultra-hard stainless steel, which requires entirely new manufacturing techniques, and achieving the precise angular body panel alignment that defines the vehicle's aesthetic. Ultimately, the third quarter results position the Cybertruck as a qualified success. While the spotlight may have been on the Cybertruck, the financial engine of Tesla remains its established duo, the Model 3 sedan and the Model Y crossover. In the third quarter, these two vehicles accounted for the vast majority of the company's output. with a combined production of 476,000 units and deliveries of 461,500. These figures are a powerful reminder of Tesla's dominant position in the mainstream EV market. The Model Y in particular continues its reign as one of the best-selling vehicles in the world, electric or otherwise. Its blend of practicality, performance, and access to the supercharger network creates a compelling package. It resonates with a broad global audience, families in California to professionals in Shanghai. The sustained high volume of Model 3 and Model Y sales is critical for Tesla, as these vehicles provide the cash flow and operational stability needed to fund ambitious new projects like the Cybertruck and the development of next-generation platforms. The company's ability to consistently produce these models at massive scale across 4 continents is its most significant competitive advantage. The slight dip in overall deliveries compared to analyst expectations can be partly attributed to planned factory shutdowns for upgrades and a market that is becoming increasingly crowded. The story of the Model 3 and Y in Q3 is therefore one of resilient strength. They remain the undisputed workhorses of the Tesla empire, holding the line and funding the future, but they are now fighting a much tougher battle to maintain their dominance. Moody exterior factory shot of dark-lit Tesla vehicles with Model 3 in shadow. Model 3 driving, then parked. Side profile, urban road setting. Cybertruck head-on on road. Bold front-facing composition. Model S driving, or parked in premium sedan framing. Model X on road with falcon wing doors closed, SUV profile. For the third quarter of 2025, these flagship models posted combined production of 19,100 units and deliveries of 17,000. These numbers, while a small fraction of Tesla's total output, represent a stable and highly profitable niche for the company. The Model S and Model X are not intended to be volume sellers. Instead, they serve as halo products that showcase the pinnacle of Tesla's performance, technology, and luxury, with features like the ultra-high-performance Plaid powertrain and the distinctive falcon wing doors on the Model X. The steady demand for these high-priced vehicles, which can easily exceed $100,000, is a positive sign for the brand's strength among affluent buyers, even as the market floods with new premium EV offerings from brands like Porsche, Mercedes-Benz, Lucid. The Model S and X continue to hold their own. However, the big news swirling around Tesla's lineup involves the future of its best-selling vehicle, the Model Y. Following the successful launch of the Model 3 Highland refresh, anticipation is building for a similar update to the Model Y, codenamed Project Juniper, a sleek, refreshed Tesla Model Y parked next to a current generation Model Y, highlighting the design differences. While Tesla made no official announcements in its Q3 report, factory shutdowns and retooling activities noted in the production numbers have fueled speculation that preparations for Juniper are well underway. The eventual launch of the Juniper refreshed Model Y will be a critical moment for Tesla. The quiet success of the S and X provides a blueprint for the much-anticipated evolution of the Y. No analysis of Tesla is complete without a deep dive into its performance in China, the world's largest and most fiercely competitive electric vehicle market. The third quarter report indicated that while Tesla's sales in China remain substantial, the landscape is becoming increasingly challenging. The Giga Shanghai factory continues to be a model of efficiency, producing a significant portion of global output of the Model 3, producing the Model Y for both the domestic market and for export. However, Tesla is no longer the undisputed king of the Chinese EV scene. It faces a formidable domestic rival in BYD. BYD sells more total new energy vehicles, including plug-in hybrids. BYD is rapidly closing the gap in the pure electric segment. Competitive pressure comes not just from BYD, but from other local players. NIO, XPeng, Li Auto. A revitalized Huawei is making deep inroads through partnerships. These companies are innovating at a blistering pace, often offering features, designs, pricing specifically tailored to the tastes of Chinese consumers. This has forced Tesla into a series of price cuts throughout the year to maintain its market share, a move that has helped prop up sales volume, but has also squeezed profit margins. The third quarter numbers reflect this reality. Tesla is still selling a lot of cars in China, but it is having to fight much harder for every sale. In response to this heightened competition, Tesla has been adapting its strategy. The rollout of the updated Model 3 Highland was a key move. Its more premium feel and refined aesthetics were seen as a direct answer to the sophisticated interiors offered by local competitors. The third quarter results from China tell a story of a foreign giant learning to compete on local turf. The battle with BYD and others is not just a fight for market share. It is a race for technological supremacy and manufacturing scale. In the immediate aftermath of the third quarter delivery report, the reaction from Wall Street was a mix of cautious optimism and renewed concern. Tesla's stock, known for its volatility, saw a modest dip in pre-market trading. The slight miss on delivery expectations combined with the continued trend of production outpacing sales. That gave bearish investors ammunition to argue that the Tesla growth story is facing significant headwinds. Analysts point to the moderating year-over-year growth rate and increased inventory as signs demand may be plateauing. On the other side of the aisle, the bulls found plenty to be encouraged by. They highlighted the sheer scale of nearly 500,000 vehicles produced in a single quarter and the Cybertruck ramp-up. For this camp, the 11,000 Cybertruck deliveries are a clear signal that a new, high-margin product line is coming online. They argue the slight delivery miss is merely a short-term blip. This is driven by Tesla's technological lead in battery tech, autonomous driving, and manufacturing efficiency. The investor mood is best described as one of transition. For years, the market valued Tesla as a high-growth tech company, not just a car maker. Now, as that growth moderates, focus is shifting to profitability, gross margins, and the success of new ventures. The upcoming earnings call will be even more critical, as investors seek commentary from Elon Musk on margins and Cybertruck cost downs. Ultimately, the Q3 numbers have created a more polarized debate around the stock. The report didn't give a definitive answer, leaving investors in a state of heightened anticipation. As the dust settles on Tesla's third quarter 2025 report, the overarching narrative is one of complexity and transition. The results are neither a clear-cut victory nor a sign of impending doom. Instead, they paint a picture of a company navigating the difficult passage from a disruptive, high-growth startup to a mature, global industrial powerhouse. The story is no longer one of exponential growth, rising pressure, intense competition, the immense challenge of maintaining momentum at a colossal scale. Tesla is still growing, year-over-year deliveries are up, but the pace has slowed, forcing the company and investors to adapt. Model 3, Model Y have held the line, churning out volume, yet they now battle in a crowded field. Sustaining demand needs product refreshes and strategic price adjustments, which can eat into profitability. China illustrates this pressure. Tesla versus agile domestic rivals like BYD, a multi-front fight for market share. The ability to defend China will shape Tesla's global standing. This quarter shows Tesla remains formidable, but its path is more contested. Enter the Cybertruck. Is it the game changer? Q3 gives a tentative yes, with qualifications. Production ramp is real and impressive. Tesla is manufacturing the vehicle at scale. Q3 is a turning point. The era of easy growth is over, replaced by intense competition and macroeconomic pressure. The Cybertruck is the key to the next phase, a bold bet to redefine a massive segment. Its success is crucial to reigniting the growth narrative. This quarter lays the foundation, but full potential is not yet unleashed. The road ahead is fraught with pressure, yet with Cybertruck rolling off the line in numbers, Tesla has a powerful new tool to shape its future.